Microsoft reported what they call Q4 earnings after the bell. Now, the most important thing to understand with Microsoft is when they report their earnings, it's not the full story. You have to wait till 3 p.m. Pacific time or about 6 p.m. Eastern time to get the all-important forward guidance for the upcoming quarter with the company. And when that is announced, that, my friends, is when Microsoft starts to move in the after hours. And after the company announced that shares were initially down just fractionally, now I am seeing shares of Microsoft down about 3% in the after hours. We'll talk about what this means from a technical perspective. Those of you that have been on the sidelines for Microsoft, are you going to get some excellent buying opportunities in the coming days ahead? We'll pick some levels out. We'll show you some areas where, if you want to buy the dip on Microsoft, there are some excellent spots. We'll take a look at the different segment results. Probably more interesting is the search results. We'll talk about that, and then we'll go through these financials. Also, very interesting in these financials is a little bit of a preview in terms of the investment cycle that we're going on with Microsoft, and eventually, maybe we'll get a payoff for that as well. What is going on, investors? Hopefully you guys are doing well out there. I'm super excited. Microsoft Corporation over the last year is up a solid 33%, but year to date is on a rocket ship, up over 46.5%. But if you do stretch this out to a 10-year time frame, shares of Microsoft up 984%. So yes, they're doing well year to date. Yes, they're doing well over the past 365 days. But this is a company that has been doing this really forever, essentially. Now, the company reported what they call a fiscal Q4 earnings results, revenue coming in at $56.2 billion. That was about 8.3% growth year over year. Wall Street was expecting a number to 55.5, but nobody cares about last quarter. It's all about the next quarter for Microsoft. And really, if you really think about it, it's actually this time next year is what I would be thinking broadly about with Microsoft. We'll talk about that as we move through the show. But I do want to get into the Q1 guidance, which is the upcoming quarter for Microsoft. They're anticipating a revenue range between $53.8 billion all the way up to close to $54.8 billion. Wall Street was expecting 54.92. So this is a company that's coming underneath the revenue estimates that Wall Street had. Even the low end estimate that Wall Street had for the upcoming quarter was at $53.39 billion. Microsoft coming in close to that low end estimate. Now, when you look at the segment results, obviously some things to really like. 26% growth over at Azure, 26% growth at Dynamics 365, 21% growth on just the Microsoft Cloud revenue. Here's the interesting thing, though, is obviously this company has rolled out a lot of changes to their Bing search engine, and this gives us a window. Look, it's a rounding error for this company, probably from a revenue perspective, but this gives us a little bit of a clue into Google, okay, as they start to roll out more generative stuff onto their search engine. You know, it's difficult, okay? I'm in the beta program for Google, okay? The generative part pushes down a lot of sponsors ads, which would have been there at the top. Google's probably going to do a little bit better job integrating new ads, but you see with Microsoft, this is a deceleration in terms of your search business. Up only 8% year over year. We've been kind of low teens, double-digit type growth rate for the ad business. And so I actually think that has more to do with the changes that the company's made with adding ChatGPT to the Bing search engine. Just anecdotally as well, I buy a lot, or I used to buy a lot of ads on Bing, and now I just cannot seem to get any clicks because of the generative results pushing down sponsored results. That's something these companies will have to look into. Now, company, obviously, from a revenue perspective, this is I think it's its largest quarter, $56.2 billion. Big jump year over year. What I noticed is look how well this company controlled their costs down here. Look at your research and development over the last year. I was expecting this to go up, maybe not meaningfully, but like at least go up over the last, okay, I mean, they've done a lot of cost cutting at this company, and it shows up right here. 6.8 billion, nearly 6.9 billion down. Yeah, on R&D, Microsoft, all the products they've announced, all the stuff that they have going on, their R&D expenses over the last year actually went down. Okay, look at your sales and marketing from 6.3 down again. And this is on higher revenue. This is on 8.3% higher revenue. The company drove down R&D costs, drove down sales and marketing costs. G&A cost went up. If I were just to guess, I would assume there's some litigation, like one-time litigation type stuff in here. And so like this company just over the last year, operating income ballooned from 20.5 up to 24.2. Okay, they added like a shade over, we'll just call that like $4.3 billion to their revenue side. And a lot of it flows down to operating income. So this is a company, while they're disappointing a little bit on their revenue guidance total, they talked about on the conference call, like sequentially, which means quarter over quarter over quarter, they're just going to invest more and more and more into their cloud business as they start rolling on that $30 subscription that they're going to bolt on to 365 customers that want that generative AI, that ChatGPT Copilot inside of their workflows, okay? And so they're just testing this now, and they're going to roll this out to customers. I think it's a great opportunity for Microsoft. I think any weakness in shares of Microsoft can absolutely be bought in the longer term. Now, company from a cash flow perspective, just $28.8 billion worth of cash flow. Company continues to buy back shares, although at a slightly lower pace. And look, when your stock is up this much over the last year, but particularly year to date, I actually don't mind the company kind of pumping the brakes on the share repurchases. Additionally to that, we've obviously have the closing or the potential closing of that Activision deal, which was pushed out until about October, but it looks like to me that'll probably get done. That'll obviously impact cash and the amount of ability that this company has. So dialing back the buybacks in the most recent quarter definitely makes financial sense. Here's where things get really interesting. Look at your addition to property, plant, and equipment over the last year from $6.9 billion boom, all the way up to, we'll call that nearly $9 billion. And the company talked about on the conference call, this is not going to go down. This is going to go up. And look at your purchase of investments from 4.9 all the way up to $12 billion. This company is moving quickly. It's moving at the speed of a startup, and I actually like that. Now, investors in the short run are not going to like it, but look, the shares of Microsoft were at all-time highs. It's natural to have a little bit of a breather. We'll talk about that more here in a second. But when it comes to the balance sheet, look, the company has a mountain of cash. That mountain of cash will get dented up a little bit, once that Activision deal closes. But understand that also, the other thing to understand is these revenue estimates do not include the closing of that Activision deal. It also doesn't include any of the revenue numbers. Activision, as we know, is a profitable company. It has relatively significant revenues, maybe not compared to Microsoft, but it is a company with like real revenue, real profit, real cash flow. You're going to be able to potentially bolt those on. It's possible, I don't know, but it's possible some of these Wall Street estimates for the forward quarters actually included those numbers or maybe factored those in to a certain degree. So this miss, at least underneath the revenue guidance, might be nuanced just a little bit. Now, plenty of cash. Obviously, that'll get dented up, but the company generates so much cash flow. Look at over the last 12 months. The company generated $87 billion worth of positive cash flow. I'm assuming that's probably potentially going to be even higher next year, even despite the investments this company is doing. At least from an operating cash flow perspective, this company is bolting on Activision, which again generates positive cash flow. Things are looking solid for Microsoft, obviously from a financial and a fundamental perspective, but Wall Street didn't like what they heard on the conference call, and we are seeing shares that were initially up here at the previous highs that you made back here in November. We are seeing a sell-off, so we'll put a little fake red candle in here. Shares are down again in the after hours. This thing can fluctuate a little bit. I mean, look, Microsoft could be up 4% next tomorrow. Who knows? But you are getting a pullback in this one. Obviously, it's not necessarily a large one. If you didn't buy Microsoft today, I don't know, 4.5% down or $15 per share, it's going to make you run out and buy even more shares. Obvious pullback areas are down here about $3.19. Further back, I know this seems improbable. Sometimes I point these large pullbacks out, but like large pullbacks have happened over the last like 365 days. Guys, they actually happen. But let's take the broad view of Microsoft. We'll change this to kind of a monthly chart. We'll forget the time period when Microsoft basically went sideways for a decade or so, and focus on the fact that over the past 10 years, the stock's really been up in a straight arrow. A pullback to trend on Microsoft, particularly in the short period of time, would take you back into kind of the $300 range. And look, as shares are trading in the after hours at $335, a pullback to $300 is just another 10% off of shares. Look, I hate using the term like back the truck up or anything like that, but that is a moment when and look, everybody's going to be looking at the same chart. So I would actually start a little bit sooner than that, really between these two areas, which in an absolute sense is between, we'll call it 289 up to about 320 on Microsoft. That's an excellent buying opportunity if it materializes. I'm not convinced because this company has so much going on. I personally believe that $30 add-on, okay, this is not a $30 product. This is simply an add-on to Office 365. And a lot of people are looking at the fact that it's like an 83% price increase. But what they don't factor in is that if this simply makes employees of an enterprise literally just 1%, you could probably even get it down to fractions of percentage better at their jobs, more efficient at their jobs. $30 per user per month is one of the greatest bargains in all of corporate America, because think about what an employee makes at an organization from a salary perspective. Maybe they're making $3,000, $4,000, $5,000, $6,000 a month in terms of a salary. If we can make the sales staff 0.5 or 1% better at their job because of some Microsoft Copilot thing that you just got to press a button to install into your entire workforce, $30 is a great bargain. And I think enterprises are going to line up out the door for Microsoft. This is a company, when we look at their forward revenue estimates as a quarter-over-quarter basis, growing at kind of the low double digits. The speed in which they can roll out this $30 365 add-on, these, I believe, are going to be conservative for Microsoft in the short run. The company gave a target of the back half of next year where things will start getting spicy from that service add-on. I think you get an opportunity to buy Microsoft. You should absolutely take it. Not really going out on a limb there by any means, but it is worth mentioning. Hopefully, you guys have a wonderful day. Obviously, we'll be back the rest of this week with more videos, but that was Microsoft. Hopefully, you guys have a great day and good luck with your investments.